Your retirement money keeps disappearing into insurance policies that do absolutely nothing for you, sold by agents who prey on your deepest fears about leaving your family in financial ruin. The insurance industry has perfected 6 scams that steal an average of $28,000 from seniors annually, and they're counting on you never learning their tricks. I'm Samuel Montrose, CPA and attorney at law with over 35 years of experience, and I've obtained the internal scripts they use to manipulate you. Scam number 2 uses one specific phrase about crushing medical debt that has already tricked 2.3 million seniors into overpaying by $18,000 each. But before we get to that devastating scam number 2, let me expose the 5 other insurance traps that are bleeding your retirement dry right now. These predators have spent decades perfecting their scripts, and once you understand their playbook, you'll never fall for their manipulation again. Insurance scam number 6, hospital indemnity insurance, the Medicare gap myth. Here's how this financial vampire operates in the shadows of your Medicare coverage. Insurance agents have discovered that the phrase Medicare gaps triggers an instant fear response in seniors, and they've weaponized this anxiety into a multi-billion-dollar scam machine. The predator's script goes like this. They sit across from you at your kitchen table, pull out official-looking charts and say, "I need to show you something shocking about your Medicare coverage. Did you know that Medicare only covers 80% of your hospital costs? That means if you're hospitalized for a week, you could be looking at thousands in out-of-pocket expenses." Then comes the hook. But with our hospital indemnity insurance, you'll receive $200 cash every single day you're in the hospital. No questions asked. Direct deposit right into your account. Sounds reasonable, right? Here's the financial trap hidden beneath this smooth presentation. These policies typically cost between $2,000 and $3,500 annually in premiums, but state insurance commission data reveals something shocking. 94% of purchasers never file a single claim. Think about that. You're paying thousands of dollars for coverage you'll statistically never use. Even worse, when claims are paid, the daily benefit averages just $150 to $200. If you're hospitalized for 3 days, the national average for seniors, you receive maybe $450, but you've paid $2,000 in premiums for that year alone. The insurance company just made a 344% profit on your fear. The cruel irony: most seniors already have this coverage through their existing Medicare supplement plans or Medicare Advantage policies. These agents deliberately avoid reviewing your current coverage because they know you don't need their product. Here's your financial protection strategy. Before any insurance agent sits down with you, demand they conduct a complete review of your existing Medicare coverage first. A legitimate agent will show you exactly what gaps exist before proposing solutions. If they skip this step and jump straight to selling, that's your red flag to end the conversation immediately. Insurance scam number 5, cancer-specific insurance, the evolution of fear-based selling. Now, this next scam might sound strange, but the legal precedent is undeniable. Cancer-specific insurance represents one of the most sophisticated evolutions in predatory insurance marketing, and understanding its history reveals exactly why it's designed to fail you. 20 years ago, insurance agents used simple scare tactics. Buy life insurance or your family suffer. But modern predators have become far more surgical in their psychological manipulation. They discovered that cancer carries a unique emotional weight. It combines health fears with financial terror in a way that bypasses rational decision-making. The modern script has been refined through focus groups and psychological testing. The agent opens with, 1 in 3 seniors will develop cancer in their lifetime. The average cancer treatment costs $150,000, and Medicare won't cover experimental treatments that could save your life. Then comes the emotional sledgehammer. I've seen families lose their homes because they couldn't afford the treatments that could have saved their loved one. Here's what they never tell you about the legal structure of these policies. Cancer-specific insurance operates under named peril coverage, meaning it only pays for specifically listed treatment. The insurance companies have spent decades perfecting exclusion lists that eliminate the most common and expensive cancer treatments. Chemotherapy, often excluded if it's administered at home. Radiation therapy, excluded if it's done on an outpatient basis. Immunotherapy, the cutting-edge treatment that's saving lives, excluded because it wasn't specifically named in policies written 5 years ago. The legal language is deliberately outdated, ensuring maximum premium collection with minimal payout obligations. State insurance departments have documented case after case of families who paid $25,000 in premiums over 10 years, only to discover their actual cancer treatment qualified for just $5,000 in benefits. The insurance company collected 5 times more in premiums than they paid in claims. The critical financial takeaway is this: comprehensive health insurance coverage will always outperform disease-specific policies. Instead of buying cancer insurance, use that same premium money to upgrade your Medicare supplement plan or increase your health savings account. You'll have broader protection and better financial outcomes. Insurance scam number 4, accidental death insurance. When good intentions meet financial disaster. I had a client named Robert who walked into my office last March, completely shattered. His wife Margaret had passed away from heart failure at age 73, and he just discovered that the $3,000 they'd been paying annually for accidental death insurance wouldn't pay a single penny because she died from natural causes, not an accident. They told us it was extra life insurance, Robert said, holding the policy with shaking hands. The agent said it would give us peace of mind, but when I called to file the claim, they said heart failure doesn't qualify as an accident. 20 years of premiums, $60,000, and we get nothing. This is the hidden financial trap that ruins families when they're most vulnerable. Accidental death insurance sounds like additional life insurance protection, but it operates under completely different legal standards. The policy only pays if death results from an accident, not illness, disease, or natural causes. Here's the devastating reality. Insurance commission data shows that accidents account for only 2% of deaths among seniors over 65. That means 98% of senior deaths don't qualify for accidental death benefits. You're essentially buying insurance that covers 2% of possible outcomes while paying premiums based on 100% of the risk. The agents know this statistic, but they've developed scripts to hide it. Instead of explaining the limitation, they focus on dramatic accident scenarios. What if you're in a car crash? What if you fall down the stairs? This policy pays double your regular life insurance in those situations. But car crashes and falls represent a tiny fraction of senior deaths. The vast majority of seniors die from heart disease, cancer, stroke, or other medical conditions, none of which qualify as accidents under these policies. The financial mathematics are brutal. Average accidental death premiums for seniors run $3,000 annually, but the average payout is under $500 because so few deaths qualify. Insurance companies are collecting 6 times more in premiums than they pay in claims. If Robert had invested that same $3,000 annually in additional term life insurance, Margaret's death would have provided a $100,000 benefit regardless of the cause. Instead, he's facing retirement with no death benefit and $60,000 in wasted premiums. Your protection strategy is simple. Review your existing life insurance coverage first. If you need additional death benefits, increase your term life insurance or purchase whole life coverage. These policies pay regardless of how you die, accident, illness, or natural causes. Don't let emotional scenarios about accidents trick you into buying coverage that excludes 98% of possible outcomes. Insurance scam number 3, long-term care insurance overselling. The global perspective on elder financial protection. If you've ever felt like the American insurance system is rigged against seniors, this is the legal proof that you were right all along. While we've been conditioned to fear crushing long-term care costs, other developed nations have solved this problem through different approaches that reveal just how much we're being overcharged. In Germany, long-term care is treated as a social insurance program, Similar to Social Security, citizens pay modest contributions throughout their working years, and comprehensive care is guaranteed without the financial devastation we accept as normal in America. The German system covers 89% of long-term care costs through social insurance, leaving families responsible for only housing and meal expenses. Compare this to the American predatory model. Insurance agents use fear-based scripts about $150,000 annual nursing home costs to sell policies with premiums that often exceed $5,000 annually. But here's what international data reveals. The average long-term care insurance policy purchased by Americans provides benefits that cover only 60% of actual care costs. Even more damaging, actuarial studies show that 40% of long-term care policies lapse before benefits are needed. This means nearly half of purchasers pay premiums for years, then lose coverage right when they need it most. The insurance companies keep all those premiums with no benefit obligation. The Japanese approach offers another revealing contrast. Their long-term care insurance law requires modest contributions from all citizens over 40, but provides comprehensive benefits including home modifications, family caregiver support, and institutional care. No one faces financial ruin from long-term care needs because the risk is spread across society rather than concentrated on individuals. Here's the American legal reality that agents hide from you. Long-term care insurance operates under elimination periods that can deny benefits for months after you qualify. Many policies require 90 or 180 days of paid care before benefits begin. During this elimination period, you're paying full private rates, often the exact $150,000 annually that agents warn you about. The international evidence shows that comprehensive health coverage combined with Medicaid planning provides better financial protection than private long-term care insurance. Instead of paying $5,000 annually in long-term care premiums, that money invested in a health savings account or working with an elder law attorney to structure your assets for Medicaid qualification provides superior outcomes. Scandinavian countries demonstrate that elder care doesn't have to bankrupt families. Their tax-supported systems provide comprehensive care while preserving family wealth. The American model of individual insurance purchases only enriches insurance companies while leaving seniors vulnerable to coverage gaps and policy lapses. Insurance scam number 2, Medicare supplement duplications. The script that stole $18,000 from 2.3 million seniors. Picture yourself 6 months from now. You're reviewing your monthly expenses and discover you've been paying for the same Medicare coverage twice. You calculate the numbers. $4,800 annually in duplicate premiums that you'll never be able to recover. But instead of that sinking feeling of financial loss, you're filled with confidence because you learned to recognize the manipulation script before it was too late. This is the exact phrase that has already tricked 2.3 million seniors into financial devastation. I need to talk to you about leaving your spouse with crushing medical debt. Medicare doesn't cover everything, and when you're gone, your spouse will be responsible for thousands in unpaid medical bills. But with our Medicare supplement plan, you can protect them from that financial burden. Here's how this scam reaches into your bank account. The agent targets married seniors and creates a false crisis about spousal liability for medical debt. They paint vivid pictures of your surviving spouse losing the house to pay medical bills, struggling to make ends meet, calling the children for help with basic expenses. The emotional manipulation is surgical. They're not just selling insurance, they're selling relief from the guilt of potentially burdening your spouse. They position the premium as an act of love rather than an expense. But here's the legal reality they hide. Medicare beneficiaries already have comprehensive death benefit protection through Medicare itself. When a Medicare beneficiary dies, Medicare coverage terminates, and all outstanding medical obligations terminate with it. Surviving spouses are not legally responsible for the deceased spouse's Medicare-covered medical debts. Even more devious, these agents are typically selling Medicare supplement coverage that duplicates benefits the senior already has through their existing Medigap policy or Medicare Advantage plan. They avoid reviewing current coverage because they know their product is unnecessary. Federal Medicare data reveals the stunning scope of this fraud. Seniors targeted by this script pay an average of $4,800 annually for duplicate Medicare supplement coverage they don't need. Multiply that by 2.3 million victims, and insurance companies have extracted over $11 billion in unnecessary premiums using this single phrase. The damage compounds over time. A 65-year-old senior paying $4,800 annually in duplicate premiums will lose $96,000 over 20 years, money that could have secured their actual retirement needs or left a real legacy for their children. Your financial protection comes from understanding that Medicare supplement decisions should only be made during specific enrollment periods with comprehensive analysis of your existing coverage. Any agent who creates urgency about spousal medical debt liability is using a script designed to bypass your rational decision-making. The empowerment strategy is simple. Before any Medicare-related insurance discussion, demand a complete audit of your current Medicare benefits, supplement policies, and drug coverage. Legitimate insurance professionals will insist on this analysis. Predators will try to skip it because they know you don't need their product. This manipulation script works because it combines Medicare confusion with spousal protection instincts. But now that you know their playbook, you have the financial power to protect your retirement savings from this $4,800 annual drain that destroys retirement security while providing zero additional benefits. When an agent uses the phrase about crushing medical debt for your spouse, you'll recognize it immediately as the red flag that identifies a financial predator trying to steal your retirement security through manufactured fear and duplicate coverage. But the most devastating scam of all is insurance scam number 1, final expense and burial insurance. The ultimate predatory masterpiece that has perfected the art of stealing from grieving families before the grief even begins. This is how they execute the perfect financial crime. The agent sits with you in your living room and says, "I know this is uncomfortable to talk about, but I don't want your children to be burdened with funeral costs when you pass away." Funerals now cost $15,000 or more, and most families have to go into debt or deplete their savings to give their loved one a proper burial. Then comes the emotional manipulation. With our final expense insurance, you can have peace of mind knowing your funeral is completely paid for. Your children won't have to worry about money during their time of grief. Here's the financial trap that destroys families. Final expense insurance costs 5 to 10 times more than equivalent term life insurance. Seniors pay an average of $6,000 annually for $10,000 in coverage. But that same $10,000 death benefit through term life insurance costs only $600 annually. The insurance companies are collecting 10 times more in premiums for identical death benefits. Over 10 years, you'll pay $60,000 in premiums for $10,000 in coverage. Your family would be financially better off if you skipped the insurance entirely and put that $6,000 annually into a savings account. You are not powerless against these financial predators anymore. You now have an arsenal of knowledge that can save you between $25,000 and $50,000 over your lifetime. You understand their scripts, their psychological tricks, and their legal loopholes that trap unsuspecting seniors. Let me remind you of the 6 financial weapons you now possess. First, you can instantly recognize hospital indemnity insurance scams that exploit Medicare gap fears while providing coverage you already have. Second, you can identify cancer-specific insurance manipulation that uses fear-based selling while excluding the treatments you'd actually need. Third, you can spot accidental death insurance deception that collects premiums for coverage that only applies to 2% of senior deaths. Fourth, you can detect long-term care insurance overselling that creates false urgency while providing benefits that don't match your actual needs. Fifth, you can recognize Medicare supplement duplication scripts that manufacture spousal debt fears to sell coverage you already possess. And finally, You can avoid final expense insurance traps that charge 10 times the cost of equivalent life insurance protection. Now I want to hear from you in the comments. Have you been approached by an insurance salesperson using any of these fear-based scripts? Which of these insurance scams surprised you the most? And what questions do you wish you had asked before buying insurance? Drop your experience in the comments below. Your story could be the protection someone else needs to avoid losing their retirement savings. Hit that subscribe button and ring the notification bell, because every week we release new videos packed with legal strategies to help you stay financially secure and protect your wealth from predators who target seniors. Next week, I'm revealing the 4 legal documents every senior needs to prevent financial elder abuse, including the one document that can stop family members from draining your accounts even if you become incapacitated. You are only one smart decision away from complete financial protection.